and all.
Yeah. तुम्हारे फोन से करो. Okay. So as we have already discussed that diluted EPS is like because of certain factors like convertible preferred stock and convertible bonds. Okay, these two are the reasons for diluted EPS. Also some, like we can say,
Warranty
some,
and
yeah,
scrap.
some options or some warrants. These are also the reason for diluted EPS. So convertible bonds,
Sir, I
convertible.
can't see your screen.
Oh, just a second. Sorry. I did not share it today. Okay. Can you see now?
Mm,
Can you see?
Waiting.
Yeah. So convertible bonds, convertible preferred stock, options, and warrants. These are the four reasons because of which the EPS would get diluted. Okay. Now we will see with the help of a question like how like EPS, diluted EPS can be found out. Okay, we'll see with the help of a question right now. So there's a question here. Kelly Corporation had a net income of $100,000. Okay, not 100,000. It's like $1 million for the year. That's 10 lakh we say for the year just passed, and the company had 500,000 common shares outstanding throughout the period. Now, first step, if you want to find out diluted EPS, then you can do it with certain with a procedure. Okay, so the first step, before you can find out the diluted EPS, you have to first find out the EPS, that is basic EPS, BEPS. Okay, so first you should know what is your basic EPS. After knowing this basic EPS, then you can decide what would be your diluted EPS. Why? Because if you know the basic EPS, then the next would be diluted EPS, which would be less than this. At any
Hmm.
like you can understand, diluted EPS is nothing but your EPS is getting diluted. So definitely it's understood fact that your basic EPS would be a higher amount always than the diluted EPS. Okay. Now, Kelly had also had outstanding all year 7,500 shares of $100 par value convertible non-cumulative preferred stock paying a dividend of 4%. For a par value outstanding $7,50,000. So what is that? The net income of the company is 1 million. Okay. The stock what the company has, common stock, is 500,000. Okay, so you already know that if you divide this net income by Vansco, you get your basic EPS. But you should know there is one more fact here. Kelly also had outstanding all year 7,500 shares of $100 par value. Those are preferred stock. Okay, non-cumulative preferred stock, and it pays a dividend of 4% for the par value outstanding of this. So $100 per share into 7,500 shares, the value of the total non-cumulative convertible preferred stock is $7,50,000. Correct? Isn't it so?
Yeah.
So the preferred dividends, how much would be the preferred dividends for this? $7,50,000 into 4% the dividend. So dividends would be 30,000. So now 1 million minus 30,000 gives you 9,70,000. This is your income available to common shareholders, IAC. Correct or wrong?
Yeah.
Yes, this is IAC. After deducting from net income, you are deducting the preferred dividends which you are supposed to pay. You get income available to common shareholders divided by Vansco. Right now, definitely this convertible preferred stock would be converted into equity, but that is in the coming future, not immediately. Immediately, how many shares you have outstanding? 500,000. So what is your basic EPS? 1.94. Correct?
Right.
Yes. Now have a look through this, then we'll move forward fast. Have a look at this.
Yeah.
If you're done, shall I move forward then?
Give me a moment.
Yeah.
I'm noting down the questions. Okay, sir.
Yep. So next point. See, now some events are happening. We have to consider those events. During the previous year, Kelly granted options to its president. That means they have given some option to their employee to purchase 30,000 common shares at a price of $10 per share. That means, when you give some kind of benefit, when you want to sell the shares or give the shares to your employee, you have to give them at some discounted price, isn't it so? What, irrespective of whatever is the price in the market, but you will be selling the shares to your the company's president at $10 per share. Okay, now since they were issued during the previous year, the stock options were outstanding during the full year, for which diluted EPS is being calculated. So this particular option which you have given to the president of your company, that means Kelly has given to its president, Kelly is a company, to buy the shares at $10 per share, and how many shares company wants to sell them? 30,000 shares. Okay. Now that option is still outstanding. If they exercise this option, then that option would be like that means that option would lapse. That means they have considered that option, okay, to exercise. Now some other points. During the year, Kelly's common stock sold at this and this. That means at the beginning of the year, the stock of the company is getting sold at $22, and at the end of the year, the price of the stock is $30, the market value, market price, and the average price is $27. Okay, fine. Now, in order to calculate, now what we will do is we will see that 30,000 shares you are offering to your president. $10 per share is the value. So total value is $300,000 worth of shares you are offering to them. Correct or wrong?
Yeah.
Yes. So that means you will be selling 30,000 common shares to your president at the rate of $10, and you will be getting a cash of how much? How much? See, you are selling the shares to your president, so how much he will pay you?
300,000.
Yes. Then what you are doing with this is, with this money, you want to repurchase your stock. That is also a condition given in the question. See, in order to calculate the net number of shares that would have been issued due to exercise of stock options for the calculation of DPS, assume that all of the outstanding options were exercised on Jan 1st. That means on Jan 1st, the president is buying your company stock, you're getting cash out of it, out of the transaction, and then what you're doing is company use the cash proceeds from that exercise to repurchase its own shares as treasury stock. Understood? Hello?
Yeah.
So what you are doing is you are buying your own stock with this money what you got. So now $300,000 divided by $27, the average price, okay, which is running right now. You want to buy your stocks from the market, okay. So how many shares you can buy? 11,111 shares you can buy at this rate, okay, isn't it so?
Right.
So now what is happening? 30,000 shares you sold. Out of that, 11,111 stocks you bought. So how many are outstanding in that? 18,889. Correct or wrong?
Right.
Now already you had this many shares outstanding, and now this many shares more increased.
Additional.
Okay, and this is your income available to common shareholders. So what is your EPS? 1.87. Previous EPS was
EPS
1.94. Right now
94.
it's 1.87. It is diluted
Lesser
EPS.
diluted.
That's it. Okay, just calculate. We'll move forward.
So
Next question.
one thing, So
Yeah.
when it is diluted, then only we will calculate in terms of the additional information given, right? When we
Yes.
are calculating a basic, it we will take the basic things.
Yeah, they're like only Vansco and like Vansco you have to find net income, income available to common shareholders you want. That's it. Here also you need to find those two, but additional shares if you are issuing to anyone, if the
Mm-hmm.
bonds are getting converted, if the preferred stock is getting converted, those things you need to add. That means those adjustments are to be taken additionally for finding out diluted EPS.
Okay.
Yeah.
Those additional only we are considering while calculating the diluted.
Of course, yes, yes.
And we have just taken the average price. We have not made any calculations. So whatever is given over there, we have taken that
Yeah,
average
we did not
price.
do any calculation. If you want, you can do the calculation also. Opening plus closing divided by 2. Opening price plus closing price divided by 2.
So are we getting 27 if we do that? Or it can
Approximate,
be different also.
approximately you'll get that. We can do that here. We can take this.
26 we get the average price.
Yeah, maybe they have given, so you can take this
Hmm.
information. If they
Okay.
don't give, then you have to calculate.
Okay. Fine.
We've done, then I'll move, scroll down, then we'll move forward.
ठीक है.
Now see, we are going to give EPS effects on convertible bonds and preferred stocks, preferred shares. So I'll explain you that with the help of an example. Okay. See what happens when you are finding out your diluted EPS. Denominator effect is given, of course, correct? But
Hmm.
denominator effect is nothing but you are adding additional shares to the pre-existing shares what you have, isn't it so?
Hmm. Hmm. Hmm.
Because like some stocks have got, suppose it is a preferred stock, convertible preferred stock, that convertible preferred stock would be converted in the future in equity, correct? Convertible bonds would be converted in the future in equity. So since this would be converted into equity or common stock, this would be converted into equity or common stock, both would increase the number of shares outstanding in the denominator, isn't it so?
Hmm.
Of course. But what about the numerator? Some effect has to be given in the numerator even. What is the effect which has to be given in the numerator? Suppose the convertible preferred stock has been converted into equity. Now in the future, will you pay dividends to preferred stockholders?
No.
No, of course. Now that dividend what you were supposed to pay to them would be paid to whom? Common equity holders, correct?
Common equity. Huh.
Isn't it so? See, you are supposed to make dividend payments to your shareholders, correct?
Yes.
So
Right.
what you were supposed to pay to preferred stockholders now would be paid to equity shareholders or common equity holders. Why? Why? Because now these shares are not existing. What are existing now? The common equity shares.
Hmm.
Understood? Second
Because
point.
that will change into equity. That's why.
Yes, yes, yes. And secondly, convertible bonds. See, convertible bonds are going to get converted into common equity again. So whatever interest you were supposed to pay to convertible bond holders now would not be paid to them. So now it would be paid to whom?
Equity.
Equity holders. So in numerator
Hmm.
you will add this also. Okay.
Tax we will add.
Yes. So in numerator, you will be adding what you were supposed to pay to
Share.
bond holders to the equity holders. You will be adding that in the numerator. That's called numerator effect. And denominator effect is nothing but whatever the convertible bonds or preferred stock had been converted into equity, that will add up to the existing equity. So that you have to add in the denominator. Understood?
Mm-hmm.
So whatever the shares you already had existing shares, to this these shares will be added. Why? Because these shares are the fresh shares, fresh equity shares. Why they are
Hmm.
new equity shares? Because they got converted. And since they got converted, now whatever was supposed to pay to them will not be paid to them, but it will be paid to the equity holders, and that will be added up in the numerator to what? To the
Hmm.
net income.
Net income.
Isn't it so?
Yeah.
That is IAC, generally income available to common shareholders. Understood?
Mm-hmm.
So numerator effect is nothing but the convertible preferred stock preferred dividends would not be paid to preferred dividends in the future. Why? Because they have got converted into equity. So that will be added to income available to common shareholders in the numerator, and in denominator this preferred stock are getting converted into common stock. So that would be added to the existing already existing equity shares. Okay. Same goes with the bonds. Now onwards, the bondholders will not be receiving the interest. Why? Because they have got converted into equity. So since interest would not be paid to them, that is that who deserves that, or who should get that? The existing equity holders. Okay. So that would be added to the numerator to IAC, and in denominator this convertible bonds which have got converted into equity will be added to the existing equity shares. Understood?
Hmm.
So this what theoretically I have explained you. I'll explain you practically right now. Just see this question.
Mm-hmm.
Kelly, continuing with the Kelly Corporation example. So why to go into this? Let's take a complete question, okay? And then I will justify this also. Don't worry. So here it is. What I'm showing you, a chart. Okay, this chart. Now, when we started this Kelly Corporation example, you clearly remember we started with $1 million, correct?
Mm-hmm.
We removed the preferred dividends, right?
Hmm.
We got the income available to
Basic.
common shareholders, correct?
Yeah.
And we divided that with the 500,000
Hmm.
outstanding equity
Outstanding
shares. We
share.
got basic EPS, right?
Right.
Then what happened is the stock options, which we have sold the 30,000 shares to president. We got money from that, and what we did with that money, we used that money to buy back our own shares, and we could buy back 11,111 shares. So how much was
Hmm.
outstanding that time? 18,889. Isn't it so?
Yeah.
That got added to your denominator,
Hmm.
which is this, and your Vansco has
500.
become 5,18,889, and 9,70,000 was your IAC, income available to
Hmm.
common shareholders, and your EPS has got diluted here, and the diluted EPS came out to 1.87. Correct?
Right. Right.
Now next step. Next step, what is happening is Kelly company is has issued some convertible preferred stock. What they have done? They have
Issued
issued
the
some
convertible.
convertible preferred stock, and I'll show you the data. The data is here. The 7,500, you already know this from the question. Already you know this from the question.
Hmm.
Previously, while doing the Kelly Corporation question, you already saw this point. That company
Hmm.
had some 7,500 shares of $100 each, and those are outstanding for the entire year, and that used to pay 4% dividend. Okay, so these
Hmm.
shares valued this much, 4% dividend. When we multiplied, we got $30,000 as the dividend value. Isn't it so?
Hmm.
We got it or not?
Yeah. Yeah.
Now this 30,000, to whom it should be paid now after these shares getting converted into equity? Will they be paid to the preference shareholders or equity holders?
Equity.
Equity holders. Why? Because now the preference shares are not existing.
Hmm.
So by default, this will go to whom? Come on,
Equity shareholder.
common equity holders or common stockholders or equity shareholders, whatever you want, you can say. So what you'll do, you will add this in the numerator to what?
Highest net income.
And in denominator, what would happen? Number of shares would increase by how much?
75,000.
That's what you're going to see the effect right now. So 30,000 preferred stock now will not be paid to preferred stockholders because those are convertible preferred stock had got converted now, and this now
Equity.
belongs to equity holders, and
Hmm.
75,000 shares the preferred stock has got converted now. So now these many outstanding shares you'll see, common equity shares you'll see,
Hmm.
and your IAC has become this much, your Vansco is this much. Why? Because your
Hmm.
number of shares would increase here. Why? Because
Hmm.
some preferred stock have got converted into equity.
Equity. Hmm.
So now your EPS is this. Okay,
Hmm.
you are seeing a diluted EPS here also. Am I right?
Hmm. Yeah. It's
Now let's
equity.
go to the last option, the bonds, and that will conclude this question. And one more point I have to give you. So one more data here is In addition to options, you know that Kelly company has granted some options to the president to buy some stocks. Already
Yeah.
we have seen that data, no?
Mm-hmm.
So apart from that options, Kelly had some outstanding all year thousand convertible bonds of $1,000 face value each. So generally bonds are always denominated in terms of $1,000. Okay. So
Mm-hmm.
Kelly company had all year thousand convertible bonds of $1,000 face value each, with a face value of this much. When you multiply 1,000 with $1,000, you get this much. Okay, that is $1 million,
Mm-hmm.
and that is paying interest of 5% per annum. Okay, these bond, whatever the bonds the Kelly company has issued to people, that means company has borrowed money from people and given them the security of the company. So now since the company has borrowed, company has to pay interest or not? See,
Right.
what is a bond? Bond is a borrowing. That means you borrow from people, you
Mm.
give them security. So since company has borrowed money from them, they have to pay interest, isn't it so? Come
Yeah.
on, yeah. So now, what is the interest company is supposed to pay? Actually, it is $50,000 on this $1 million. 5% is $50,000. You have to remove the tax, because see, for you the cost is 70. For you the cost is how much? $35,000. Because
Mm.
why it is a cost for you? Because see what happens. 30% has gone for tax. Okay, so interest is tax deductible. You can claim deduction on this interest expenditure what you are paying to your bondholders. See, this is what government does. Government gives some benefits to companies. What benefits government gives is some expenditure. We are giving you a benefit, a tax relief. What is tax relief? That means you need not pay, uh, like you, this is tax deductible. That means you can claim deduction on that. How much deduction you can claim on that? 30% value, whatever the interest is $50,000. Of that 30%, okay, what is that?
30%.
Is
35.
15,000. So 15,000 you can claim deduction. That means they'll
Okay.
give you relief on that. You need not pay tax on that. So leftover is how much?
35.
This is the actual cost to you. Why? Because this you claim deduction and you saved your cash by not paying taxes for that. That means it is not shown in income statement, but that will go in the cash account. Na? Still you have money for that or not? Please tell me yes or no.
Yes, yes.
You should know about taxes. Madam, you understood?
Yes, sir.
Madam, tax deduction is what? It is cash saving. That means your tax will be reduced by that much. So you are saving that 15,000. So that is not a cost for you. So what is ultimately the net cost for you?
35,000.
So this is the cost you have to take. So that cost, now what do you think? Do you think this 35,000 would be paid to bondholders after they getting converted?
No.
No. So this will go to whom? Common
Equity.
equity holders. Correct or wrong?
Mm. Yeah.
And in denominator what?
1,000 bond was convertible into 10 common shares.
Yeah, so
So
that they have given some data here. $1,000 bond was convertible into 10 common shares. So $1,000 bond by 10. So how many shares you will be seeing?
100.
100
10,000.
shares. 100 shares,
Mm.
correct?
Mm.
Or you can do one thing. You can find out. They are saying na $1,000 bond. That is one bond is getting converted into
10 common
10 common
shares.
shares. So how much value is the total
1,000.
value of the bond holding is this much. One bond is this much. So it will give you number of bonds. So these are 1,000 bonds. Okay. One bond is getting converted into 10 equity shares. So 1,000 bonds will be getting converted into 10,000 equity shares. Correct?
Mm-hmm.
Isn't it so?
Yeah.
So I took the 10,000 equity shares in denominator. That is denominator effect, and numerator. Now onwards, this $35,000 would be paid to equity holders, but not to bond holders. So I take this two and I put that in this chart. I just bought that 35,000 amount and I have added here. and I also added this $10,000 here.
Common check.
But what you are seeing is the EPS, what you are seeing is right now 1.71, that is anti-dilutive. What is that?
Anti-diluted.
That means it is not getting diluted despite of your Vansco increasing. Why? Because the increment in the IAC is way higher than the increment in Vansco, correct? So you will stop your problem here itself. You will not go
Hi.
further. Why? Because you are finding diluted EPS, not anti-diluted EPS, correct? So your diluted EPS is how much?
68.
$1. Okay, just have a look through this. Then one more crucial point I need to share with you. I'll share that one.
So do we need to solve completely, or do
Yes, you
we
need to solve and write
solve
now in the
completely?
exam, but this can come as a essay question also.
Mm-hmm.
It's a very important concept in CPA, in CMA USA, in CFA. Every time they ask these kind of questions.
Okay.
In CPA also you have this topic.
Okay. Can you scroll up, sir?
Yeah,
Main problem.
you can have a look through every concept. Just one small concept I need to explain you. That's it. After that, this is done, and then you have questions to do. Then we can focus on solvency and leverage ratios. More 2 classes, ratios done.
Did we cover cash flow ratio also, sir?
That is only one ratio. Na? We will cover up everything. In last
Okay.
class, when I'll be winding up this one, I'll be just checking out what is left over. If anything is left over, simultaneously cover up.
Okay. Okay.
No ratio in the book would be left over.
Okay.
We can't, we don't have that scope. It's a professional course now. We can't leave anything.
Hmm. I have this question in textbook.
Okay.
Wanted a clear understanding only on this.
Which one?
I have the same question in the textbook.
Baker.
The Hawk one, the one
Okay.
which you have explained, no?
Okay.
Mm.
Excuse me, just go through this. I'm getting a call. 2 minutes. I'll be back.
Okay. Mm. Any doubt, Kalyani? Kalyani,
Yeah, Sima, tell me.
any doubt?
Yeah, Sima, tell me.
Any doubt of what I'm asking?
Yeah.
So there is a formula C, EPS effect on convertible bond. This can
Yes,
be
yes.
easy. Interest on bond into 1 minus tax rate. So if you read the question, okay, so we have the total face value of this, how much? 1 million, right?
Yes. Yeah.
And how much is the interest we are incurring here? 5%.
5%.
So we are simply doing 1 million into 5%. Okay. And as per the formula, we have to take 1 minus tax rate. So going further, we have a tax rate of 30%. So if we can, first you have to calculate this 1 million.
Yes, yes.
into what is a 5% of that. We receive 50,000. Okay.
Yes. Yeah.
50,000 then into, as per the formula 1, minus how much is the percentage? We have to minus 30. We get 35,000 here. That is clear?
Yes, clear.
Okay, and now as per the formula, number of shares the bonds are converted into. So in the question only, it is there. Each 1,000 bond was convertible into 10 common shares. Simply, we can do 1,000 into 10.
Yes,
We will get a 10,000. So we will get a numerator and denominator over here. Okay. 35,000 divided by this, as per the formula. We have this 3.5.
yes.
This is fine.
So diluted EPS is 1.68 and
Huh?
undiluted EPS is 1.7.
Can't hear you.
Diluted EPS is 1.68, no?
Diluted was 1.87.
Yeah,
Okay. And then we found this 3.5 over here.
Okay.
Again, they have sir has done some calculation. The last. So when we are adding it, no, then we will get 1.68. So if you see here,
Yeah.
formula, we are adding it. So we have added again this.
1.71. 0.71.
So in this, see, we got this preferred stock face value.
Yeah, shall we move forward? Done.
Yes.
Yeah.
Then one, just check this one also.
Yes. Okay. Converted to preferred stock. The second one also we will calculate in the same way, no? The way we calculated in previous for
Sorry, second one.
this preferred. This is the preferred shares, preferred stock, right? Earlier we
Yeah.
preferred shares, right?
Yes.
It
This
will
for
be in the same format, right?
same way, same way. Yes. So the point which I wanted to mention is, now you would be seeing here that convertible preferred stock and as well as convertible bond both have been taken, but we did not take convertible bonds before. Okay, either we did not take convertible preferred stock later. So why did we take this in before, and why did we take this later? What is the reason for that? So what should be taken first? That should be decided. So here the reason is, you see the numerator and denominator effect. For preferred stock, for preferred stock, the EPS effect is what, 0.4, correct? For when convertible preferred stock is taken, what is your EPS effect?
0.
Hello.
0.
What happened? You're not answering. 0.4.
For
How did
just
you
give
get
me a
this? Yeah. Shall I proceed?
yes, sir.
Yeah. So you saw that 30,000 you took here and divide by 75,000, you got the EPS effect as
0.4.
0.4, correct? And
Yes,
here you
yes.
got the EPS effect as 3.5,
3.5.
right? Which is a smaller value.
3.0.
What?
0.4.
So what does that show? What does it depict? It show this has more, this is more dilutive, correct?
Yeah, convertible
So the
pieces.
rankings should be given. Based upon that, you would be taking
Least dilutive.
least dilutive ones. Yeah. So the lowest EPS effect is most dilutive, not least. The most dilutive is what?
Hmm.
The least dilutive is what?
3.5.
Most dilutive is this.
Yeah, which is lesser.
Yeah, least dilutive is this.
Hmm.
Okay. So convertible preferred stock is more dilutive than bond, so that would be taken first. The one which is smaller is more dilutive, and that should be taken first. So this is most dilutive and this is least dilutive, so it is taken later. Okay, that is what just I wanted to explain. If this is done, then I'm moving forward.
Sir, in every scenario, this will come like that only.
Yes, every scenario the same treatment you have to give. Every scenario. That's the way to do.
So what kind of questions means will be there? Will be having
That's
everything
a good
included?
question. Yeah. So I'll give you a question. You have a look to that. And I want you to simultaneously do this even. There are many questions regarding diluted EPS which I would be giving you to solve today. Okay. So first, basically, you can go to this Valley Corporation question and just understand this one. Shall I explain this, or you will try?
We can do step by step.
Yeah, of course. First step is to find out the basic EPS, which they have done. The basic EPS is 3.50. Then company has convertible bonds, convertible preferred stock, and the EPS effects have been shown here. So convertible bond, numerator effect, denominator effect. It is 1.34. Convertible bond B, numerator effect, denominator effect. EPS effect is here. Preferred stock A, numerator effect, denominator effect, EPS effect. Convertible preferred stock B, numerator effect, denominator effect. With numerator effect, what I mean is, in numerator you are going to add this amount to income available to common stockholders. Why? Because this will not be shared with the bond holders in the coming future. This will be given to whom? Equity holders, correct? And in denominator, your van scope will increase by this much. So the
Hmm.
combined EPS effect is 1.34, isn't it so?
Okay.
The
Hmm.
same goes for all. And then when you see all this, which is the smallest one? 1.34. That is
34.
most dilutive. So first ranking. Second is 1.98, the most dilutive, second most dilutive. Then third most dilutive, then least dilutive, correct?
Right.
Yes, based upon that, you'll be giving your treatments. This is your like net income minus preferred stock, which is here, Vansco. Then, as per the EPS, as per the rankings, what you are seeing here, you will be taking each thing. That means like
We
1.34. So
will
this,
add.
yeah, this will be adding up here, and this will be adding to Vansco. Your diluted EPS is this. Again, you'll be going for preferred stock. A, preferred stock A is nothing but 1485 and 750. You'll be adding here, and your diluted EPS is this. And then third one, this one, like which one is third one? Yeah,
485.
no, here we gave no convertible bond B, this one, 1365 and 500. And then you have your
Final.
yeah, diluted EPS. Okay, so that's what this is the way you have to do. Just have a look to this question. We'll move forward.
What about this convertible preferred shares B? We are
Now,
not
if
going
you
till there.
take that again, it will be anti-dilutive. So leave that. You, if
Okay.
you want, you can check it out.
Okay.
See, this will be very highly. You will be adding a higher value to numerator and a smaller
Yeah.
amount. It will be anti-dilutive.
Exactly.
Yeah.
So in the questions, they will be providing us all this information. What would be the convertible bond numerator and denominator?
Sorry, I didn't get.
In the question,
Yeah.
to find out the
In the question, they will give the convertible bond A price. That is.
Madam, your voice is not audible, madam. Sorry to say.
Yeah, in the
what we are
question,
trying to say is
Hmm.
in every question we'll have the information regarding the convertible
Yes.
bond
Yeah,
and
you'll be
shares,
having. Then
right?
how come?
To
Yeah,
figure the
you
amount.
can't do that question without information. So let's say this is a question I'm giving to you. Now you have to solve this. Come on, do this.
Can you do this, sir?
I want you to do this and share with me. I will definitely do. So let's say the information concerning the capital structure of Petroc company is as follows. The common stock, like this was the condition in the previous year, this is the current year. So you see no change in this. These are the common stock. 90,000 is the outstanding shares you have. This convertible preferred stock, there is convertible bonds even. Okay. So this would be converted in the future into common equity, and you'll be seeing that you will add this to the Vansco and your dilute EPS calculation you'll be doing. Now, let's go to the the details given. During 2002, that is this current year, Petroc paid dividends of $1 per share on its common stock of no use and 2.40 per share on its preferred stock. It is of use. Okay. Now, so they have given us the net income to 2,85,000. So net income is 2,85,000. The preferred stock is convertible into 20,000 shares of common stock, and the 8% convertible bonds are convertible into 30,000 shares of common stock. The net income is assumed that the income tax is this. So what we'll be doing here, first of all, I will be finding the diluted EPS. To find out the diluted EPS first, before finding out the diluted EPS, you have to first find out the basic EPS, correct?
Yeah.
So 2,85,000 is your net income minus what is the preferred dividends they have given? 2.40. 2.40 into how many shares are there?
20.
10,000 shares. So 2.40 into 20, 10,000 is 24,000. So you have to remove 24,000 from this, okay, divided by like 90,000. So
2 lakhs.
So 2.9 is your this thing, okay?
We have to minus it, right? 2,85,000 minus
Yeah,
24,000.
24,000. Yes, yes. You have to do that.
2.9.
Yeah,
Okay.
and then what you have to do is you have to go for the dilute EPS. For that reason, what you have to,
Convertible preferred stock we have
yeah,
to.
yeah. So what is the preferred stock is convertible into 20,000 of common shares. So 90,000 plus 20,000.
Add 20,000. Yeah.
And numerator 2,85,000. Like your IS is
1,10,000.
2,51,000. 2,51,000 plus 24,000, and then plus what is that? 30,000 share. This bond will be converted to 30,000 shares, and 8%. So this 8% of this would be 80,000. This is like 10 lakhs. 80,000, 30%, 24. So 24, 156,000 maybe, yes. So 80,000 into 0.70, 56,000. 56,000, okay. 51,000 plus 24,000 plus 56,000. 51,000 divided by 9, 10, 11 divided by 1,40,000. 51,000 divided by 40,000. So just a second. 1,000 plus 24,000 plus 56,000. 3 lakhs?
31,000.
Yeah, yeah. 50.
31,000 plus 20,000.
2.36.
1 lakh. 2.36.
2 lakh. Just a second, madam. 1000
24
plus.
is not correct.
What, madam?
24,000.
24,000.
I think it is not.
This one
Yeah,
here.
yeah. There only.
Maybe why? Because yeah. Why? Because we should not take this. If we take this, maybe it is getting anti-diluted. So first we will see the numerator effect. So 24,000 divided by 20,000 preferred stock, and here 56,000 divided by 30,000 stocks. So 24 by 20, 1.2.
1.2.
56 by 30, 1.86. This is more dilutive, na?
Yeah, 1.2 is more than.
Yeah. So 2,51,000 plus 24,000, 24,000. This is 2,51,000.
2,85,000 minus 24,000.
Uh,
2,61,000.
That's what I'm saying. 2,61,000. Sorry, that's what I was saying. Why I'm getting this wrong?
The 3
That's
lakhs
what
more.
I wrote it wrong. Yeah.
2.43C.
Yeah. Now we can get it. Yeah. 2,61,000. 56,000 divided by. Yeah, I got it. 2.43, 2.44 something will get. Okay. Actually, here I did not write 2,61,000. I wrote 2,51,000.
Yes.
Did you understand? Hello.
2,85,000 minus 24 is 2,61,000.
That's what. No. I just wrote it by mistake. Yeah. Suman, did you understand this one?
I couldn't, sir. I was
Yeah.
trying to do
See.
step by step.
Yeah. See, your basic EPS is what? Your basic EPS is 2.9, correct?
2.9.
Yeah. Okay.
Yeah, till then I understood.
Yeah. So we took 2,61,000, the difference of this, plus this convertible preferred stock has to be converted into equity. So 2.40, the dividend per share per preference share would not be given to preference shareholders. That would rather be given to equity shareholders. Correct?
Mm-hmm.
So how much is that? $24,000. Correct or wrong?
Right.
So I added
24,000.
that to the numerator, and bondholders 30,000. They are already giving that the bonds are convertible to
30,000
30,000
shares.
shares. Yeah, 30,000 in that is the shares. So I wrote it in denominator, and in numerator this 10 lakhs ka 8% is 80,000. So I have to remove tax. So I'll get 56,000. So that 56,000 I took in the numerator. Okay. Okay. So like 2,61,000 plus 24,000 my preferred stock dividends, 56,000 my interest divided by outstanding shares 90,000 plus 20,000 preferred stock plus 30,000 bonds converted into equity. I'll get 2.44. That is
Okay.
2.4 something. Okay. You can do step by step, or else you can do it this way also.
All right.
That means in step by step, what you will do is you will be first taking this preferred stock, correct? That means you'll be writing this 2,85,000 first, and here your Vansco will be how much? It will be 90,000, right?
Correct.
Then you will be removing the preferred dividends, 24,000 in first case, and you'll be getting like 2,61,000, right?
Right.
2,61,000 here 90,000. If you divide, you'll get 2.9 is your basic EPS, correct?
Yes, till then it's right.
Now again, what you'll do is you'll give numerator effect of this preferred stock. Why? Because it is more dilutive. So 24,000 again you'll add, because that has got converted into equity, and you'll get 2,85,000. And again here you will be adding 20,000 shares in the denominator, right or wrong?
Right.
So 9,90,000 plus 20,000 is 1,10,000. You divide this and you tell me what are you getting?
1.2.
9
then
lakh.
9. No, 1,10,000. 2,85,000 plus 1,10,000. 90,000 plus 20,000. No? Here your 90,000 shares you have, no? Plus 20,000 is preferred stock.
2.59.
But still we have scope of dilution. So that bonds have got converted into equity. So 56,000 we have to add here, correct? I already told you how 56,000 I got. 80,000 into
Yeah.
1 minus tax rate, yeah. And again here like it has got converted into 30,000 shares. So your ISC is how much? 3 lakh? 31,000, how much?
41, sir.
Sorry?
3,41,000.
3,41,000. And here you have 1,40,000. So when you divide, approximate, okay?
Okay.
This is the step-by-step way. From here. So I did everything 2.9 and 2.59 and then 2.44. Anything else? Any doubts?
I'll practice this sum one more time, sir.
Yeah, you can.
Hold on.
But you almost got it now, like
Yeah, I almost got it, but while practicing, I prefer to do bit slow.
I was not fast actually. I showed two methods. Okay. So you can once again go through that. Okay. Any doubts you can
Yeah.
ask me. I have done step by step also. I've taken 2,85,000 and I have deducted the preference share dividends. I got income available to common shareholders. From net income, I have to remove this. This is net income.
Yes,
I
yes,
removed
yes.
preferred dividends. I got income available to common shareholders divided by the outstanding shares. That's for.
Till then it is clear.
Yeah, I got 2 point something 2.9. Then that is basic EPS. Then again what happened is the preferred stock has got converted into equity. So preferred stock dividends have to be added up to income available to common shareholders, and the
Yeah.
preferred stock have to be added in the denominator. So this denominator 90,000 plus 20,000 will give me 1,10,000 and 2,85,000 here. 2,85,000 by 1,10,000 is 2.59. Again, I
Got it.
have one more step to do. That is 56,000 is the bond interest and 30,000 is the stocks. Okay, bond has got converted into equity stock. So these two when I add up, I get 3,41,000 and this two I add up, I get 1,40,000.
1 lakh
Now
40.
I divide, I get 2.44 as my diluted EPS.
Got it.
Okay, so 17th one is a homework, and then your 18th one is a homework, 19th one is a homework, 21st one is a homework. If you can do, that will be great. 21 also. I'm giving only 5 questions to you to solve. Tomorrow, if you're not getting, we'll see
The
that. Okay.
fifth one, it was all about operating expenses.
Which one?
Okay.
21.
Oh, they are finding out net
Essay.
income with this.
Yeah, yes.
That is what it is. It is what is matter for us. Correct? This matters. Chalo, see you tomorrow. Yeah, tomorrow, day after tomorrow, what like Suman?
Or tomorrow.
Tomorrow shall we take?
For this, I need time to solve.
That's what I'm asking. Whether tomorrow or day after tomorrow.
Day after tomorrow would be fine, sir.
Okay, okay. Thank you.